Blockchain technology is one of the most talked about topics in the world. A few days ago, my colleague Dean spoke to you about Cardano, one of the many cryptocurrencies available in the market today. But what if you're a retail Indian investor? What if you have no stake in cryptocurrencies? Would then the entrance of blockchain technology in the Indian markets affect the way you trade? My name is Ishan and I'm an associate here at Minance. Along with the rest of the retail investors in the country, the Security and Exchange Board of India, or SEBI, has been taking elaborate steps to explore whether or not blockchain technology could potentially be used as a financial instrument in Indian markets. SEBI has appointed an advisory board called the Committee on Financial and Regulatory Technologies to explore the blockchain platform as well as other new technologies that are making waves in the sphere of post-trade settlement, fundraising, and asset management. This is a first step to welcome a new technology so that India could gradually reap its benefits in the future. The country is following in the footsteps of other market regulators and exchanges like the New York Stock Exchange, the Deutsche Börse, and the Japan Exchange Group, all three of which have shown their intent to regulate this technology. So, what would blockchain bring to India? Financial markets are inherently fragmented. Traders in India have to go through an extremely complex process that takes up to 3 business days to complete transactions. Now, this is mostly due to the presence of intermediaries, post-trade settlements, and a lot of regulation. Blockchain technology brings with it easier processes of clearance and settlement, and it would virtually automate the entire post-trade process. This would in turn reduce massive amounts of paperwork and also reduce costs levied to the customer. Moving on, what are the entry barriers? In the 21st century, the entrance of any new technology brings with it exponential legal and regulatory challenges. This is especially true in the case of blockchain. The financial ecosystem in India is extremely uncertain about how this new technology, especially applied to capital markets, would live up to its promise. After all, how do you regulate something that is inherently decentralized? As you would imagine, there are massive risks across this database. Now, I understand that I've fed you a lot of information, but the bottom line remains: what lies in the foreseeable future? Blockchain technology has the potential to completely disrupt financial services. However, there need to be widespread changes in our traditional understanding of business processes, right from the buy side to the sell side of the economy. Now, whether or not these are changes that SEBI is willing to accept is a matter of waiting and finding out. As always, we would love to hear your opinions. Please leave your views in the comments below. Thank you for listening.